Okay, Brent from TradeGuild.blogspot.com, July 10th. We just went through the subscriber list from June 24th, and if I sound a little bit down or not excited, I'm just kind of losing my voice here, so I'm trying to keep it low key. But we're looking at CPWR, CompuWare, after hours, coming in with disappointing guidance for um, Q1 of '08, and we're looking at the hourly chart with pretty prominent 3C divergence over here. So keep an eye on CPWR tomorrow. There may be some trading opportunities there if you are quick and nimble. What else do we have? The Fed chair, Bernanke, I'm not sure how to pronounce that, really didn't do much for investors today or recently. He's pretty much left investors without a clear picture of the outlook for the economy, interest rates, and inflation. So there's a lot of guessing in the market right now. The market does not like guessing, and it has responded pretty badly to that. Here's the S&P, and we're looking at 3C right now on a daily. You can see the divergence there. Late in the afternoon today, the program trade kicked in as the S&P failed to hold support over here at the yellow moving average. That's the 50-day moving average. So a large trade program kicked in and sold. What else do I have? I got a bunch of notes here for you, so I'm just kind of winging it. All 10 economic sectors posted losses today with no highlights outside of the one thing, gold. This is the Spider Gold Shares ETF for the real metal gold, and it was up a little more than 0.3% today. We're going to take a look at the spiders again, and I want to show you a couple things. Here is 3C. You can see, if you look at my last videos that I posted, I did a pretty comprehensive anyway, review of the market and why I think it's in trouble. There was a lot of indicators there spelling it out. Here's my personal indicator, 3C. It should basically confirm the market. So as the market makes new highs, the indicator should be making new highs. These are negative divergences, very, very prominent negative divergences as well, and they are on all time frames. Here's an hourly time frame. You can see the divergence really has been all week pretty much. Show you a couple other time frames. Here's a 15-minute divergence. You can see very, very negative since the 6th, and that makes sense because it was a pretty slow trading week last week, and now that investors are back, they're weighing in on the market. Here's something interesting though, 5-minute. We're getting a positive divergence over here. Let's take a look at a 1-minute, and you can see in the spiders again another positive divergence. So we may open up, or maybe not open up higher, but I think we're going to see a rally of some sort in the morning. These are very short time scales, so it's not predicting anything substantial, but I think we're going to see a little bit of an oversold pop in the morning. Let's take a look at the Qs real quick. And the Qs, the last video I showed very, very lopsided institutional investment in the three major indexes, the diamonds, or the Dow, let's say the Dow, the S&P, and the NASDAQ. And it was about 4-1 favoring the NASDAQ. Institutional money recently flowing into the NASDAQ, and I told you why I thought that was on those videos. I'm not going to go into that too much here, but let's just say earnings expectations for tech are higher than the rest of the market. You can see a very negative divergence still in effect here on the Qs, the NDX 100 or the NASDAQ 100. So I think that the Qs are, or the Qs or NASDAQ or tech are more susceptible now um, than the other indexes. Even though they held up better today, there's more new money that has flowed into tech recently within the last couple of weeks. And if tech does not perform as we unravel more of these Q2 earnings, then I think tech, the NASDAQ, the Qs, all will be very, very susceptible to a dramatic decline, in my opinion. So let's take a look at a couple different time frames here. Again, here's hourly. You can see divergence here on the hourly. Here's a 15-minute chart, and you can see we're seeing a little bit of a positive divergence developing today. 5-minute chart, 1-minute chart, very, very positive divergence on the 1-minute chart. We saw a little bit of a move start, but this is indicating quite a bit more. So I'm expecting more of a move tomorrow morning in the NASDAQ. A couple ideas to look at for the week ahead. And this has been talked about a little bit on the blog lately, this TAT. And you can see it's got a pretty nice 3C profile there. It's also an ascending, let me get rid of this, it's an ascending triangle that has broken out over here, and it's pulled back to support. So it's a pretty reasonable entry over here. If it breaks down below this $21 of support level in here, then you exit the trade. But other than that, your measuring implications are the back end of the triangle. So let's say 16 to 21. So it's a potential 5 points. Maybe we'll see $26 on TATTF if it decides to cooperate. It's going to be swimming upstream, though. This is materials and construction. I'm not sure exactly who they sell to, but residential, as you know, is in deep trouble. So that may act as a little bit of a drag, but a very, very nice ascending triangle, picture perfect for that formation. Another one to watch, this is going to be the last symbol I'm going to show you tonight, ATVI, which is Activision. They came out with a good report, it looks like, and you can see that it's broken out on good volume above the descending trend line over here. I want to show you 3C on a 15-minute time frame. You can see on the daily time frame it's negative, but you can see an improvement over here. It's held. If we look at a 15-minute time frame, you can actually see the positive divergence right here at the lows, and you can see that it is now climbed into gear. So ATVI looks pretty positive. I'd be looking for opportunities there with potential pullbacks when they might occur. Of interest, I think particularly will be the 10-day moving average as it catches up here a little bit, or this VWAP here around $19. So that's going to do it for tonight. I hope you enjoyed it. If you're interested in signing up for the subscriber list, the new one is out today. It came out just before the market opened, and then you can still get that list all this week, and a new list should be ready probably somewhere around Sunday. So tighten up your stops, keep an eye on everything. It's going to be an interesting ride this week, I think. Again, this subscriber list is available, and if you want to sign up for a shot at Telechart, 30 days free, you can use the links from our site. We are a Telechart affiliate, a Warden affiliate, also for blocks, and we appreciate your support in that matter. It doesn't cost you anything more. I appreciate you watching, appreciate you coming and reading tradeguild.blogspot.com, and we'll see you tomorrow.